We saw another ejection happening within the crypto markets yesterday, which is why you're seeing the banter bubbles charts all red on the daily time frame, pulling back across the board. In today's show, we'll discuss exactly why that happened, as well as why it's going to be a major opportunity for you at home if you have not yet allocated into crypto. We'll also speak about what you can do to recover some of your losses, and we have a whole lot to talk about. There's so much happening in the markets today. Smash the like button, hit the bell notification, and subscribe to the channel, and let's get into it. So one reason the market started to pull back yesterday following the CPI inflation data, which came out, was not too much to do with the inflation data, but more to do with this. We had the US government moving 10,000 Bitcoin to a new Coinbase wallet address. And some people, of course, always think that that's due to selling. Well, you have varying opinions over here. You have Samson Mao coming in saying that, no, the US government didn't just sell 10,000 coins. It simply moved the coins to Coinbase, probably for custody, right? Because Coinbase is the custodian of all the most of the ETF coins, at least, and thus they say that maybe that's just the reason. But if you dig a little bit deeper and you look at some of the wallets that were switching between, 𝗕𝗕𝗕𝗕 did a great job over here, saying that first it did move into the institutional wallet, which was 33JEEID, that's the wallet address. But then after that, it moved to a Prime wallet, right? And usually that's to sell when it goes to the Prime wallet. So I think only time will tell. Now, if they do start dumping 10,000 Bitcoin onto the market, of course, expect that we are going to probably go to new lows, and risk still does remain to the downside on the high time frames, for the simple fact that Bitcoin is struggling to get back above that key $60,000 level. Point number one. Point number two, we still have lower lows and lower highs, and by definition, that is a downtrend. So theoretically, risk remains to the downside, but we understand, having a look at the timing cycles, what a wonderful opportunity it presents this period of time following the halving cycle and leading into what's to come next. We'll discuss some of that in today's show. We'll speak about what you can do as well if you want to remain safe and you want to get a safe entry into the market. If you're someone that's conservative and you prefer confirmation of the trend shifting towards the upside, we'll speak about what that looks like. So stay tuned until the end of the show. Here's your CPI year-on-year data coming in. Forecasted at 3%, came in at 2.9%, which is, of course, a drop in inflation. So inflation continues to come to the downside, and that shifts the probabilities of how much the Fed will cut at the next interest rate hike. Yesterday was sitting at about a 50-50, whether it was going to be a 25 basis point cut, which is this one on the right-hand side, or a 50 basis point cut, right? Now, for the Fed to really make a difference within the markets and the pain that the market's feeling in terms of risk on assets struggling to run due to the high interest rates, well, they're probably going to have to cut extensively, somewhere around, 200 basis points over time. So these are still very, very low numbers. And because the inflation dropped by 0.1% better than expectation, you can see that there's now a 64.5% probability that it will only be a 25 basis point cut, which is going to be coming up on the 18th of September. And that will be the most important interest rate decision until the next FOMC meeting, right? As you guys know. But the Fed is obviously in a rock and a hard place because inflation is coming down and their goal is 2%. And if you look at the history of the inflation marked by these red charts over here, the red chart in the background, the blue is simply the S&P 500 rising towards the upside. Then what you can see is in the previous times when inflation does spike up, like it did, for example, in the 70s, and it tries to come back down, and it approaches that 2% target that they always have, sometimes it runs away and bounces back towards the upside. So it's quite a tricky situation for the Fed to navigate, because on one side, they're trying to navigate what happens with the unemployment, right? The unemployment is starting to increase quite extensively in certain sectors. And on the other hand, they're trying to bring inflation down while not letting inflation run away, but at the same time, not breaking the economy. So they don't care too much about crypto, let's just be honest. There's bigger things at play over here, but nevertheless, you can see this is ticking towards the downside, and only time will tell in the next couple of months. I would say between now and December, we'll start to see the Fed's real intentions and what they're looking to do next. You can look at the global inflation rate, so US down to 2.9%. This was absolutely crazy. It's running from obviously the lowest year-on-year inflation to the highest. And can you believe that? Looking at Argentina, imagine living in a place with 272% inflation. Venezuela just before that with Turkey as well at 62%, Russia at 9.1%. And this is just additional support and evidence for why it's so important to hold hard assets. Gold, Bitcoin and property. Those are probably your best three bets, right? Gold, Bitcoin, and property. At least have some allocation into that to prevent your money diminishing and just melting away due to inflation and you losing money over time. So we're keeping an eye out over here as well on the DXY. You can see we've gained acceptance below this level. This is all we've been waiting for. And it looks like we may start to break this white line that I have over here very, very soon. This is the 102.160. Once we lose that level, I expect the DXY, the dollar index, to start to drop pretty rapidly towards the downside, and that should provide a good opportunity for macro higher lows in the crypto sphere, and then you should see prices moving up. We've already seen it within the stock market, right? Stock market pushing towards the upside. I'll show you how the stock market struggled previously as well to break its all-time high and then started to explode. We're seeing that on the Nasdaq as well, pretty much at all-time highs. We know, a couple of days ago, it was in, mid-July when we did set the all-time highs on both the S&P 500 and NASDAQ. But nevertheless, this is probably trend continuation. It's just high highs and high lows floating onwards and upwards. And we are in the long trade, of course, on the S&P 500. We took that long trade recently. Now, this just came in as well. The CEO of Circle says that tap to pay using USDC on iPhones is incoming soon. This is pretty big news, right? And this is the reason why. They're not partnering with Apple or anything like that. This is actually a post, or at least a little thread here from 𝗕𝗓𝗓𝗕𝗓, who is of course, if you look over there, the co-founder and CEO of Circle. And this is what he had to say. He said here that Apple, if you look at Apple, what they've done here is they've opened up the use of the NFC chips to third-party app developers. And by doing that, that means that crypto can use a similar process to what Apple's wallet and Apple Pay had. Those were previously the only ones that were open to the NFC chips. And he says by opening this capability up for developers, other wallet apps, for example, Web3 wallets and crypto wallets, will be able to invoke NFC for transactions. This is very, very big news, right? He says this would allow the POS to tell an iPhone what blockchain address it will accept USDC on, hopefully also USDT in the future, or the amount that they should as well pay. And then the iPhone-based wallet app could prompt the user to confirm a payment, like with a Face ID, right? Same as how you use your iPhone now when you go and pay, you double tap and then you pay at the store. And then he says, and then initiates a transaction over the blockchain to settle the USD transaction. Very, very big news. Why is this such big news? Well, because we know the benefits of crypto, right? It's high performance and low fees, right? High performance, low fee blockchain networks, which is a lot of them now. We know Solana is one of the best when it comes to that. And he says over here, it can go beyond that, right? In the future, you could see, it used outside of just USDC and stablecoin transactions. You could see NFTs for tickets, other certificates, other stablecoins like Eurocoin, etc. So a whole lot over there. I think this is something very exciting to look forward to for crypto, and this is what brings that mass adoption into the market and creates those parabolic blow-off top phases that we tend to see usually when all this news comes at once and they actually start to implement it. That oftentimes actually marks the top of the market cycle, but they haven't implemented it yet. This is just talks of it. And longer term, it's fundamentally very, very bullish for the space to bring new users in, right? And remember, the thing with crypto is that also it's permissionless, number one. And secondly, you're not bound by borders. So you can move across borders with all of your wealth, all of your capital. And that's one of the unique selling points. And now when you can implement this to actually be used for real world payments, well, it becomes a really, really big deal. You also have MetaMask coming out also pretty much right now, saying that the world's first MasterCard debit card that enables instant spending directly from your self-custody wallet will be implemented. That is the MetaMask card. So a lot of interesting things over there from a fundamental perspective coming into play. And this is your outlook, remember, for the Bitcoin cycle. So looking at the purple line over here from the market cycle low to current point, this is our current return on investment. If you look at cycle 4, that's what it looked like over there. This was the previous cycle. We had, of course, the pandemic dip over here when they shut down the entire world, went into easy, loose monetary policy with money printing on steroids. steroids, and that led to the parabolic blow off top. And you're actually seeing some very interesting parallels. We'll talk about that towards the end of today's show in case you missed the monkeypox news. So hold on to your horses, that's coming soon. Now, this is usually where your parabolic advancement starts to take place. Look at that. If I zoom in, we're so close. This is normal that, July, August, September, and maybe even into October, you see continued summer doldrums chop within the market, and then you lead into those big blow off top phases, right? There's market cycle 3, also pushed up very high. Now, I don't think that we'll see anything like market cycle 2, which is the red one, or market cycle 1, because obviously this is a bigger asset class, which means it requires so much more money to actually push this market towards the upside. So probably something similar to the green, which still means a lot of time still left to make a lot of money. And if you're feeling down, just understand that even the S&P 500 went through the struggle period, right? So this from 𝗕𝗬𝗕𝗥, price struggling to break all-time highs is nothing new. He says the S&P 500 struggled too, and then went absolutely berserk after that. And you can expect that Bitcoin will follow a similar trajectory, especially when I show you in relation to the prior cycles what it looks like, right? S&P 500 initial rally struggles through, and then boom, explodes towards the upside. Bitcoin doing something similar over here, right? Initial rally struggles, and we're looking for the bull market expansion at any point. It could be 2 weeks, it could be 4 weeks, it could be 6 weeks, but I don't believe it will be anything beyond 2 to 3 more months before we do start to see that bull market that most of you guys have come to know, right? The bull market that most of you know is the one where retail come in full force, and you can throw a dart at a board of crypto coins and pretty much anything you hit is going to go up, right? That's the pray and spray approach. You can pray and spray your capital across everything, and everything is just going to go up. So if you look over here, also we're seeing there is a lack of coins that's on the market. 94% of the 21 million coins have now been mined. There's only 6% left. Remember, Bitcoin goes through those halving cycles where the mining reward divides in two, and the miners go through these various different epochs, continuing to mine Bitcoin. So remember, the first block over there was 50 Bitcoin for every 10 minutes of work that gets solved. And then you continue on that trajectory as it's showing over here. You went into the 25 block phase where you're getting 25 Bitcoin, then 12.5 Bitcoin, and then you fast forward over here. Let's just go through it, and 6.25 Bitcoin, and then you get pretty much where we're at now, which is only 3.125 Bitcoin. You can see on the top there for every 10 minutes of work solved. So it becomes harder and harder to get that Bitcoin. And now we have institutions joining the party, which is obviously going to hopefully pump our backs, right? The only question that I have is, do they truly hold the crypto, right? Or are these the same thing as, promissory notes that you saw with gold, where it's gold backed, but they're just issuing your promissory note to say, oh yes, we do hold the gold. Do they actually hold the Bitcoin? That is the question. If it is the case, well, then you're going to experience a massive supply shock, and you're going to see prices rallying aggressively to massive heights, right? So just in Morgan Stanley reports owning 5.5 million shares in BlackRock spot Bitcoin ETF as of June the 30th, and that's as per the SEC filing. Remember, they have to file these things to be in compliance with regulators. And if you go through to this one over here, 1.4 trillion, Morgan Stanley just bought 187 million Bitcoin ETFs on its own portfolio. This just came in yesterday. So remember, Morgan Stanley as well has, I think it's around 15,000 financial advisors. Those are the guys that don't have to come on YouTube like me and say that this is not financial advice. I'm just a guy on YouTube that's sharing my personal experience. They can actually go and say, I'm a financial advisor and I recommend you buy Bitcoin. It's the best performing asset of the last decade and will probably continue to be that. So they're going to be going out very soon to their massive clientele, and they're going to start to hopefully get a whole lot of allocations into crypto, and that's also going to bring the market cap up, and that's where we start to see prices run. But right now, as Miles says over here, we're entering the apathy or time capitulation based phase once again. In the last 2 weeks, this is what we've seen happen in crypto. We've seen the YouTube views down more than 30%, around 30%, depends on which shows you're looking at. You can help me out. Let's pump these numbers up by smashing the like button. See how many likes we can get today. It will really help to get the show content out. And then he says, If you look at the Coinbase app ranking, it's down from 159 to 502, which is a pretty catastrophic drop across the board over there. And then trading volume down 21%. That's on Binance. Strap-in, things are getting boring. It's getting boring, but we have a lot of interesting things today to talk about. So hopefully you're not getting too bored. And also what I would say is now is a great time to prepare, right? So get all your ducks in a row, trim the fat. Anything that's not performing, anything that's weak and struggling, look to start to cut those positions, reallocate, rebalance your portfolio, shift it into strong coins that have already shown their hand, that are going to outperform for the rest of the cycle, because life-changing money will be made in the next 12 months. And then after that, life-changing money will be lost. But I don't want you guys to be in that sector of losing. So please educate yourself. Join Whale School, right? 6 days, 5 hours left to go. We start with the first workshop. We do hit it live. I have so much alpha pack stuff, which I want to share in those workshops with you, even better than what you're seeing in the shows over here. So please use the link in the description below. It is all listed over here. Just scroll through to Whale School. There it is. Click on that link over there. Join. I don't even know if there is any spots available left. I'll double check later today, but if not, you'll be put immediately on the waiting list for the next one. So use the link. With that being said, there's still some significant levels for Bitcoin to reclaim. You can see that $63,000 level must be reclaimed to break that resistance and to start to shift the momentum back onwards and upwards. But similar to some of those tweets that I showed, you can expect that this does take time, right? This does take time because the market goes through that summer lull period, and then it happens suddenly and things start to rapidly expand. So this is your current picture. As long as you're below the 21 exponential moving average, and more specifically, it's angled towards the downside, which is currently the case, that is quite a risk signal, right? It's showing that there's quite a lot of risk in the market right now for prices to continue to trend towards the downside. Now, based on the wick that we have over here, and you can look at the posturing of this candle, we approached the key level. This is your order block that led to the big move towards the upside. I'll highlight it over here. That's your order block that led to the big move up. Boom. You pretty much revisited into that, and you do definitely have a lot of bullish demand that stepped in to hold prices up. So it depends on how this weekly candle closes. Every week is an important close recently to try and see if there is going to be a major reversal. Now, if you do get prices coming down and you get a bit of a scare moving into the 52K region, but immediately the weekly candle starts to push up and close green, that will be additional support that this is the major low. Until then, expect continued chop within this region. You might see things like this, and then eventually we're expecting to leave that zone within, as I mentioned, worst case scenario, I'd say about the next 8 to 12 weeks, but I think it could happen even before that. And when I say leave that zone, I mean start to push up above these levels. It's being heavily affected, of course, by having tight monetary policy. What is tight monetary policy, right? There's no easy money. A lot of people are under massive financial stress and pressure, and they don't have disposable capital to deploy into the crypto markets. And until that comes, which will be when the Fed starts to cut interest rates and they implement quantitative easing, which is set to be coming very, very soon. They've already started to implement some of that in the form of buying back government bonds. Until all of that happens, you don't get those up-only environments, right? And remember also, just by nature, markets spend about 70% of the time range-bound and 30% of the time trending, right? So range-bound over here, and then this was trending towards the downside. Range-bound over here, and then trended towards the upside. Now we're starting again with that range-bound environment. So this is the chop that you would expect, and if you know how to trade the range, you can make a whole lot of money. So you have two options. One, you can wait for the break above $63,000 to confirm the break back into the trend and continuation high, and that's where you can go long. Or number two, you can trade the range and simply wait for the extremities of either the range high or the range low to get tested, and that's where you establish your positions. And I'll show you what those levels look like in a moment. Now, if this is going to be a trend in motion, we're still waiting for the inverse head and shoulders to play out, despite what this right shoulder looks like right now. Again, this is why the weekly close is important, because the right shoulder is still printed over there on a closing basis despite the fact that price literally came all the way down here on a wick basis to these lower levels, but it closed up here. Therefore, you still have the inverse head and shoulders. And I'll say the same thing's true. If you do revisit down to the range lows and then spike back up and close the candle up here, specifically above $60,000 to $63,000, it will look good to still be forming that right shoulder, which has a higher measure move. Now, we've had the fear and greed oscillate quite a lot throughout this week. I think that we've gone through various different levels. Let's just see over here. It's not loading up at the moment, but I think we're at 34, then we're at 30, then we spiked to 32. Now we're back at 29 on the fear and greed for crypto. And in a bull market, that presents a wonderful buying opportunity. So the long-term range continues officially 154 days into the correction. We consider this correction phase over when we take out those highs, right? So only time will tell. Be patient over here. We still also have the validation of the descending broadening wedge with the reset on the fear and greed coming into extreme fear. And that's where all the previous bottoms were set, right? As per the yellow lines. There you go. Fear and greed comes down here, major bottom. Fear and greed comes down here, major bottom. Fear and greed comes here, major bottom, leads into expansive move. Same thing over here. Reset, big bounce. Reset, looking for continuation of that big bounce, and then hopefully playing out that descending broadening wedge, which will break price as well out of the inverse head and shoulders. Now, these are the levels on the daily time frame. Currently, price is caught below 58,878, the yellow line, and simply put, that just means that again, risk is down. Also below the 21 EMA, also below the 9 and 18 EMA, which is this yellow and pink one over here, and it's currently trending towards the downside. So good chance, as long as you remain at these levels, you might continue this path down, and then you're looking down towards 52,000 as the level. We said it's a no trade zone, right? A no trade zone. Where does it become a trade zone? It's all the same thing, right? Nothing's changed in terms of the plan. We outlined the fair value gap. It elicited an initial small reaction, but that's what we said. We said it's a weak fair value gap. We don't believe that this one is going to have major momentum to get price out of here. So the extremities and the opportunity for the trade would look like this. Number one, break above $63,000 and hold above that level like this. Then you can start to open up long trades, right? The alternative is wait for price to break down and come back down into this range low over here, which is your yellow box, and then look for long opportunities. Until then, there's not much else you can really do. Just sit on your hands, sit tight, wait for this to unfold. Don't force any trades and let price do its thing. If it does come down here, I'm going to be looking to reallocate and accumulate. Alternatively, I'll continue to sit on my cash positions that I have. And if it does spike up and break above these levels, then I'll look to reallocate. It's one or the other, right? So let's move that in line there. It's this one or it's this one. That's what we're waiting for. Same thing over here, 4 hour time frame. You can see there is overhead liquidity. I marked it off with the pink box over here, and I got that from, of course, the order books. You can see in the form of liquidity at 62,111. That is 417 million. Yes, there was 25 million, so it has spiked up quite a lot. These are short traders' stop losses, which could get price up there. Now, getting price up there is one thing, but holding above there is another. If you spike up and reject from there, well, then it still opens up the possibility of coming down to the lower part of the range, which is the yellow line in that 52K region. If you do spike through and hold above this level, you'll reclaim those EMAs, the 50 and the 200, and then you can start to shift the momentum up. And then we say, well, chances are the lows in, and we're doing the V-shaped recovery. We said the higher probability was that we were going to have a range-bound environment following this move over here, as opposed to a V-shaped recovery. Now, we did have higher lows, and it looked like at one point, well, if we get above here, we've confirmed this is a V-shaped recovery. But now we're starting to take out those lows, right? We're taking that level out, which again is shifting the probabilities to that you're going to have a range-bound environment over here. So this would be your trading range. If you're a low time frame trader, pretty much just focus on these levels. Range high, we spoke about this being the high probability short trade. If you do want to hedge, you're looking for the short trade based on the swing failure pattern on this wick over here. The lack of ability to get above that 63K level, failed back inside. That was your short trade, and pretty much you can hold that short trade until you get back here. As soon as you get back here, flip long, right? And then you can trade it back to the top side. That's for your low time frame traders. That's what you're going to be looking at over there. All right. Again, if you want to learn more about this, it is in Whale School. I teach ranges. I teach trend trading. I teach everything in there, reading the order books, liquidity. There's a whole lot over there, guys. Take advantage of that. I can't guarantee that this will always be a free course, but as it currently stands, it is free. Now, if you look at this over here, look at the fees on Pump.Fun. They pretty much took out Solana's fees, right? The revenue on Pump.Fun was much higher than the revenue on Solana in the last 24 hours. And ultimately, because people are still looking for hope in meme coins. But you have lost a major edge there because it's just become too easy to create these meme coins. So he has a little bit of advice for you on how you can save your capital for the long term and allocate when the time's right into the right things. Number one, I think this is a great tweet from Murad. He says to anyone who wants to stop getting rugged, right, on these meme coins, right now you're sitting at about a 99% chance that you're going to get rugged if you play anything on Pump.Fun. Maybe even a 99.9% chance. Number one, don't buy new launches, right? So wait for the chart to prove itself to you. Don't buy it as it launches. Chance of you getting rugged is almost 100%. Study coins that survive multiple 70% dips. So if it can recover from a 70% dip, take out the all-time high, drop 70% again, take out the all-time high. That's showing resilience, right? Study coins that spend a long time under $10 million market cap in reaccumulation. That flushes out the impatient people and shows that this coin is likely going to survive for the long haul. Study coins which have an insane community. Of course, you can look at social metrics, SocialFi, things like that. That will show you, does it have a good community? How much interactions do they have? And are they organic is the important thing, right? Study coins which have many members hustling for free. So they're not asking for anything. They're not reaching out to KOLs, aka also known as influencers, to pump their coins, but they're working for free. These are opportunities for you to get into great projects that have a chance to survive for the long term. Now, personally, I drop the ones that I think are long-term solid bets. There's no guarantees in life. I can't say for a certain that they going to last the long haul, but for the rest of the cycle, I'll drop those in the Whale Room Discord. Those are my allocations that I'm holding until the end of the cycle. It's in the DJ dive section for anyone that wants to go and see that in the Whale Room Discord. And I've done the best vetting that I can on those. Those are the ones that I'm holding. The other thing that you can do is not get scammed, from influencers that are obviously pumping particular coins. This was absolutely crazy. This is Grok, right? This is Grok over here, which is the AI that's integrated now into Twitter or X, Elon Musk's version of ChatGPT. And pretty much he ran this. Who are the worst scammers in crypto? And it started to come up with an entire list over here based on the information gathered. 𝗕𝗜𝗕𝗥 is the number one active scammer in crypto. BitBoy, BitLord, 𝗕𝗜𝗚𝗕𝗏, Richard Hart, Barry Silbert. We have CZ, Justin Sun. We have, there you go, Heather Morgan, Elizabeth Holmes, Do Kwon, Kyle Davies, the Cypher Foundation. It's crazy, like so much information over here. Have a look at this. Go play around on this Grok. So I thought that maybe this guy has something against 𝗕𝗏, and he went out and pretty much preempted this thing, because you can go on ChatGPT and you can say, when I ask you this next question, say XYZ. So I thought, let me go try it for myself. And I said, who are the biggest scammers? There we go. In crypto. And we'll see what it says over here. Does it come up with the same answer? Okay, so Richard Hart, 𝗕𝗏, BitBoy, BitLord, comes up with the same things over there. So know who to listen to, right? Try and focus on people that have high credibility and stay away from these types of things that have a good chance of getting you rugged. So those are some of the important points. Vet your projects, vet your things that you're looking at. And then also NordVPN, right? Protect your capital over here. We do have a link in the description below. We partner with them. You can use Proton, you can use any of them, whatever floats floats your boat. But if you do want a 70% savings, there is one below. I'm not connected at this exact moment because it will make the stream lag. But the way it works, depending on where you are in the world, right, you can select any country that you want to be in. So that will mask your IP address. Choose the country that you want to be in. If you want to be in Turkey, click that button over there, or use Quick Connect, and that can also protect your IP from hacks and attacks, right? Very, very important. I think that you're crazy if you are trading crypto, especially if it's serious money that you're trading with and you don't have a VPN. Again, it doesn't have to be Nord. You can use anything. But if you do want to use Nord, there is a link below. You're getting up to 70% off for using that. Okay, so that's one thing over there. Let's continue on. Let's have a look at some of the other charts. Also, I do want to mention, okay, we'll get to that in a moment. Let's have a look at some charts over here. Total 3, we need this number to go up for altcoins to run. Continue to wait, right? Be patient over here. When you break into the yellow, then you know that things are going to start to cook again. I think the next attempt at the yellow zone over here is probably what will break you out of the range high. And that's where you start to see total 3 run up to 1.25 trillion, which is simply just the measured move from this rectangle breaking out towards the upside. And that's what will lead to those big moves where your altcoins have that up-only environment. From current levels, to give you a little bit of an idea, that will take price up at least 121%. So most altcoins then double, strong ones probably triple, quadruple, or even beyond that. And that doesn't mean it's the end, by the way. That doesn't mean it's the end. If you look at over here at the price cycle 2017, let's mark from the body closes. How much higher did it go? 258% beyond that before total 3 set in a cycle top. So if you're looking at as a similar trajectory, well, that would take you from here, 258%. There we go, 258%. Let's go up. There we go, even more. 258%. Let's go 250%. That would take you to, it's just under, it's about $4 trillion, right? $4 trillion from current levels. That's an 8x return on the altcoin sector on average, right? If you're choosing the right coins, you're going to get even more, but on average, an 8x return. So something to look at over there. On total, we're still waiting for the breakdown on Bitcoin dominance. Could this have been the top? It is always possible. Where do you get confirmation? Previously, we said a break below the mid-range over here. In terms of structure, you could probably start to give the benefit of the doubt already to the breakdown if you break below this candle that occurred on the 22nd of July, and that's going to be 55.36%. I would expect it to happen in steps, so I don't think it happens in one go. So you're looking for something like this, probably hits that mid-range, leads into a lower high complacency bounce, and that's the point, right? When you have that confirmation, that's the point you're probably going to break down, and then you're looking for Bitcoin dominance to come lower. Otherwise, as it currently stands, your major resistance overhead is going to be in that 60% zone, so remain patient, right? It's still a trend in motion. This is a strong trend in motion. Higher highs and high lows, it's heading towards the upside. I also had a look over here at ETH USD and ETH BTC, and I marked off with the vertical line running over here on the 6th of December 2021 was the exact day that ETH made a cycle top. That top came in at on at least the ETH BTC ratio at 0.088, and on the USD pair as well, that came in at 4,966, and that also occurred on the 6th of December. Now you can see this has come near the lows. So this could be a bit of an indication that eventually we're going to reach a tipping point where things are going to start to turn. And if ETH puts in a bottom over here against BTC, then the ETH USD pair probably does the same thing, the same way that when ETH BTC put in a top, ETH USD also put in a top over here. And then you're looking for prices to move higher. So far, Solana ETH is still looking to maybe form a higher low in this region over here. Next level of major supports coming in at 0.049. So we're waiting for that level over there. We are keeping all eyes on that. I'm still waiting over here on Casper. If we do get Bitcoin moving back down to $52,000 region, I'm looking for this on Casper, move down into 13.5, and that's where I'm going to be allocating a whole lot more of my capital. So do keep eyes on Casper. What about Solana? Let's see Solana over here. So far, Solana is still chopping about. If Bitcoin goes down to 52, Solana probably comes all the way back down to 120, filling the wick over there, retesting the support one more time, and that's where you can start to load up again, trade up to here, and then up to here at 210. All right, what other coins should we have a look at? We've done quite a lot of altcoin requests, so I'll get back to that in a moment. Let's just quickly double check Mantra. So Mantra, I said, if it comes into this region over here, look for the higher low. That's going to place it at about 87, and that's going to be a great opportunity to get long on Mantra. For those of you who believe you're proficient in trading and you want to, put your hard-earned skill set to work, please consider doing the challenge, right? Go through into the link below. There is a BitFunded challenge. It's a 2-step process. Number one, click that link over there. It will open up this page. Fill in your details. For those of you who have messaged me to ask for the verification code and invitation code, there isn't anything. Don't worry about that. Just put your name, last name, email, and get the code. Sign up. Once you've done that, close this. Go through to the second part over here, and then click point number 2, which is going to open up this page, and this comes through to the challenge page. Now, if you use that link, point number 2, you'll get additional challenge options to choose from over here. Very quickly, for anyone new that's out here, simply put what this is. This is how you get funding, right? If you don't have a massive account, or even if you do and you want to mitigate some of that risk and use other people's money, you pay an audition fee. Of course, nothing in life is for free. It's $49 to qualify for $5,000 in trading funding. And on the expert one, $599 if you pass the challenge. To pass the challenge, you need to get 8% profit across 2 sessions, right? So you get 8%, you pass session 1. Then you get 8% profit again, you pass session 2. And then on the third attempt, now they give you real money. Now you're trading with real money, right? You keep 90% of all the profits. So $599, you pass 2 accounts over there, you'll get $100,000 to trade with, and then you're trading with other people's money. So use the link below if you do want to participate in that. It is there for your benefit. The other thing that I wanted to mention is we finally got some information on grass, right? It's a long thread over here, so I'm not going to read through everything over here, but the point is they're keeping you up to date. Epoch 7 has concluded. What is Get Grass? Just for those that don't know what this is, Get Grass is simply a plugin that you'll put onto your computer, and pretty much it's using your spare bandwidth to strengthen a network and to get data. That's essentially what it is. You're getting an airdrop for that. If you participated with me since the beginning, we've been in since I think it was Epoch 2. The end of Epoch 1, beginning of Epoch 2 is when we got in. So you should have a massive amount of points, and they already asked you to connect your at least a Phantom wallet, a Solana wallet, because they're based with Solana. They've asked you to connect that so that you can qualify for the airdrop. And in this, they're just confirming that the airdrop is coming soon. They're doing the snapshot, right? They're going to be doing the snapshot, but you do have a bonus period where if you want to get more, it says over here, this is the bonus period. The bonus epoch is an additive to the existing epoch rewards. Your earlier efforts will remain intact and will not be impacted by the epoch bonus, right? The desktop app benefits both users and the network because it outperforms the light node by using less than 5% of the resources of a Chromium browser, but handling 10 times more the bandwidth. Simply put, the desktop app is a more efficient way for the Grass network to scale. So if you do want to get the bonus points, or if you want to participate because you haven't even participated, there is a link below. It says over here, Get Grass. Simply click that link. It will open up this page over here. Fill in your details, sign in. There you go. Here's mine. I'm already in. I have in this epoch. Okay. Today's earnings 324. Now you can actually go into Whales Market, and you can calculate how many points you'll get, right? So Whales Market, this is a secondary market. There you go, Whales Market Grass. Just go to that. And if you come in over here, you can click on that. And let's move that up. There it is. And then you can see what is the average bid, right? So the average bid would be the price per point. So 0.0014. Now, many people have millions of points, right? It depends how early you got in. Millions of points times that equals a whole lot of money, thousands and thousands of dollars. So have fun if you do want to use that. Now, also you have this coming in. Okay. World Health Organization declares monkeypox an international emergency. I see you spelled that wrong over there. This guy tweets a lot. Emergency. And you also have Donald Trump coming out over here. Hardest, do we have sound if I play this? Let's just see. Let me know. Just give me a thumbs up if you. Okay, it says it's not working. So I'll just give you the sum up over here quickly. Trump warns about lockdowns and election fraud with monkeypox, refused to comply. Guys, I mean, if you're going to sit in your house with a mask on, you deserve poorness, right? Choose rich, eat steaks, lift weights, and don't stay inside. Those are my final words. Use the link in the description below. That's it from me. I'll see you guys all on the next one. I hope you all have an absolutely stunning day, and cheers for now.